So again, we have my friend Pat Larson here, who is from Zen Ledger, and we'll be diving into two different topics, which will be about crypto taxes and then also about raising capital. So the raising capital piece, I think anybody in here who is unfamiliar with venture capital or tech, raising money in the tech industry, this is going to be great to listen to, because this is something that he and I have both been doing for probably you were kind of in the space more from the M&A side, but doing venture capital, I think this is probably like your first venture capital company, right? Or did you do some before?
I've worked with others before, but this is the first one where I'm a founder.
Yeah. So super exciting. I've helped, I've done venture capital on my own. I've raised private funds, but also have worked with companies and helped companies raise money in the past too. So anyhow, a couple updates. Jang, did you want to actually go through some of the announcements on Discord today real quick? We got you on here? Jang, you on? Oh, God. All right, he stepped away. So I don't know if you guys have noticed, but we actually had some updates on the roles in Discord. So we have 3 different roles that have been added. You guys will see them in there. The first one is Ascended for holders of 5 through 9 crypto months. The next is Buddha, which is 10 through 19, which is the small whale. And then the Immortals, which is 20 plus. So those are the big whales. So I know Jang was going to do an announcement. I don't know if he's on right now, because we kind of had everybody waiting here for a little while. But anyways, I'll just kind of push through this. Again, some of you guys know that we have a friend of mine also coming on next Wednesday. His name is Eric Watson. He's a Hollywood producer. He's going to be helping us actually kind of craft some of this lore and try to find a decent way to get a story that sells, right? So that's one of the things that we want to do here. Other than that, I think we can kind of just jump right into it. Let's get started. Pat, again, thanks for coming on. I know you're not feeling well, right? You're up in Seattle trying to make it rain up there, but why don't we just start real quick with some facts and just kind of see if we can kick it off from here. So in 2019, just in the last year, 2021, there was $40 billion worth of NFT sales. I think the original estimate was somewhere around $29.5 billion in NFT sales. And so it's kind of like taken off parabolically over the last 1,000 days, right? We've seen a lot of crazy stuff happen. And so I think the prior year, when a lot of these first gen NFTs came out, which is, again, mostly focused around artwork, was $94.9 million. So that's a huge amount of capital that's kind of been injected into this space. And I think it'd be really interesting to kind of figure this out, because I think everybody here is wondering how this works, right? And try to figure out how they can be on top of this stuff. So real quick, for you guys that didn't get here earlier or just showing up, Pat and I all basically met each other on a Facebook post that was posted. It was the same one that I met Josh on. And so he reached out to me because we were doing on-chain analysis, and doing on-chain analysis was one of those things that would be hypercritical to, trying to figure out how to see if transactions were going to cost money, whatever, right? So he and I actually teamed up pretty early on, right? I think we were trying to figure that out. It was probably, early 2018 or a little bit before 2018? When did you guys actually set up shop?
So we formed the company in late 2017, had an MVP out by March of 2018, and raised capital throughout late 2017, mid 2018.
Yeah, and then from there, I think you and I kind of went back and forth, and we actually helped each other. I mean, you helped me find a CEO for my company, and then as we went along and kind of were getting introduced into the people in Chicago and out in the East Coast, we actually shared some investors together, right? So we were kind of helping each other and partnering with each other back and forth, trying to go out and raise capital. So anywho, let's kind of dive into your history, if you don't mind, Pat, real quick. Is that all right? You don't want to get too personal?
Yeah, sure. No, I'm like, my apologies for not buying a Monkz and putting it up as avatar here. I'm just I'm normal faced because I'm out here selling a consumer product. Yeah. So hi everyone, Pat Larson here. Nice to meet everyone. I grew up in Southern California. Half Vietnamese guy. Went to the U.S. Air Force Academy for undergrad. Studied chemistry there. Commissioned in the U.S. Navy. Was a search and rescue helicopter pilot. Had a couple combat tours and then got out. I got my MBA at University of Chicago, mostly on investment banking track, so a lot of finance and accounting. But did a lot of the entrepreneurship case studies and stuff like that. Did a year of M&A iBanking, and then have been in tech and fintech for about 10 years now. Ran a business unit at Amazon and licensed sporting goods on the retail side. So if you bought NFL, NBA, NCAA, NHL, MLB stuff on the site, that was me. And then did various like biz dev, product management, catch-all type stuff at a couple startups before co-founding Zen Ledger in late 2017 to help crypto investors and their tax professionals with their crypto tax reporting. So kind of a TurboTax for cryptocurrency. Yeah, that's the story to date.
Yep. And you guys have successfully landed a Series A recently. You guys are on your Series B, or you guys are...
So we closed the Series A in August of 2021. We've raised about 12.5 million to date in 4 rounds. And in the last round, Mark Cuban was in the round. Blockcelerate led the round. They are a crypto-focused VC here out of Seattle. And a bunch of cool investors, right? So Nick Carter, formerly of Fidelity, but Castle
Fidelity.
Island. Vestigo Ventures and Mark Cassidy, who was the CEO of LPL Financial and IPO'd it, and has been on the board of Citizens Bank. A bunch of really cool people. Converge Venture Capital, which invested early in Chainalysis, among others. Sorry, it's late and I'm blanking. I've been on calls for 12 hours. I should just bring up the press release.
Yeah.
Gumi Cryptos, Nico Matsumura.
Yeah, Gumi.
They invested in OpenSea.
Yeah. So that's Miko again, right? So
yeah.
So you guys, I mean, you've been around the block. I mean, pretty much every single large firm out there knows who you guys are. You guys are the second largest crypto tax firm in the entire world right now. So that's kind of exciting. Plus, I remember when you were starting too, it was kind of like, it was really tough. It was really kind of like, there was no regulation at all, actually. We just knew it was coming, right? I think that was one of the first things that you were really pitching me on this product. And you and I both kind of knew, like, yeah, it's fucking inevitable, right? Like,
yeah. So
Uncle
in
Sam's
2017,
something like.
Yeah. And so in 2014, the IRS put out just a short document saying like, hey, crypto is a new thing. We know it's here, and we're going to kind of tax it like property. You have to declare all this stuff, and you're going to pay income and capital gains on it. And then in 2017, they sued Coinbase for information disclosure and subsequently won that lawsuit. And that's why cryptocurrency banks generally will disclose anything over like 20,000 of aggregate activity. But Congress has not passed a lot of laws that stipulate anything about cryptocurrency. So it's hard for Treasury and IRS to do anything, except for they did specifically say that 1031 exchanges are only for real estate.
Yeah.
So you can't swap ETH and Bitcoin and say it's a 1031 exchange.
Yeah. But I mean, so what does that mean necessarily? It's hard to prosecute on crypto tax, or that it just doesn't carry a lot of weight yet, or it's something that, because it's not going to be retroactive, right? Or will it? Probably will be, actually.
So that is hard to say, but they can say very easy things like, look, we told you in 2014 that if you earn income or have capital gains on crypto, you have to disclose it and you have to pay taxes on it. And it's your job as the taxpayer to accurately and fully disclose, your income and capital gains to the government. That's just that's table stakes here, because we have aircraft carriers and we all love them. So we want more of them. So you have to pay taxes. And then let's see here. And then, so on your tax forms now, 1040, above the fold, the first question that is asked is yes or no. Did you transact in digital assets this year? So that's
Yep.
like, clearly a perjury trap. And that's like you knowingly check that box, yes or no. And so does your tax professional who's filing on your behalf.
Yep. Yeah, and so I mean, they're clearly aware of what's happening. I know that there is a lot of change that's actually on the means of happening in regulation. Wyoming's kind of taking the lead in a lot of that stuff, and I know that's not really your area of expertise, but we're starting to see the inclusion of decentralized, I would say, economies be totally considered by the Fed. Um, and they know it's coming. Basically, there's no stopping it at this point. They're just getting ready for some kind of economic shift or economic conversion. But yeah, so this also kind of comes back to, I think, which is the crux of what the IRS notice was in 2014. It's the virtual currencies are digital representations of value that functions as a medium of exchange, right? And along with that is basically all of the things that happen during a transaction, right? So there's a tax on gas, there's a tax on the actual buying of assets, there's a tax on selling of assets, there's also a creator's tax that comes along with it, right? So with that being said, can we talk about that a little bit and what the difference is between those things and why they're viewed by the IRS like that?
Um, Sorry, I'm typing. What was the question?
Yeah, no worries. So the IRS notice on 2014 and 21 was that virtual
Yeah,
currencies
yeah,
are basically just a representation of exchange of value, right?
yeah.
So basically every part of the transaction itself is something that the IRS wants to look
Mhm.
at, right? So that means you have to report not just your transactions, you should also be reporting gas fees, right? Or taking into
Yeah, so the way it
consideration gas
works
fees.
is you always have to report taxable events, and that's generally when you realize profits, right?
Yes.
If you realize a bunch of losses, you can claim those as a tax loss asset, and they'll offset $3,000 of income, and then an infinite amount of profits if you want to. If you have $1 billion of trading profits and $1 billion trading losses, it nets out to zero, and you don't have to pay any taxes on it.
But that would
And
be
then
tax
the
loss harvesting, right? That's just a
that is
strategy,
that
right?
is that tax loss harvesting is a specific strategy to capture losses. If you're just like a
Yes.
very volatile trader and you just happen over a year to have $1 billion of losses, $1 billion of gains, that's not necessarily tax loss harvesting.
No.
Um, and then yeah, your gas fees, your transfer fees are tax deductible. They're basically added to your cost basis. So if
Yep.
you buy something for $100, you incur $10 of gas fees. Now the IRS considers that cost basis $110, and so if you sell it for
Mhm.
$200, you have $90 of gains, not $100 gains. You have 200 minus 110, not 200 minus 100. So you would pay your federal, capital gains, long and short term, on the $90 of gains.
Mhm. And you're probably going to see that because people trade a lot in crypto, that almost everything. I would say, what percentage of it is typically considered, or what? I mean, I don't think you could probably disclose that with us, but uh, probably a majority of crypto is short-term capital gains, right?
Uh,
Would
so
you?
so there's it is very hard to say. Like you could look at on-chain analysis and wall analysis to kind of back into that a little bit. Um, from a Let's see here. A lot of it's actually non-taxable self-transfers. I would say it's from like
Yes.
custodian to giant exchange. And so when you see those whale alerts and 100 Bitcoin are moving left and
Yeah.
right, that's generally just an exchange doing non-taxable self-transfers.
Yep.
Um, but like all the DeFi stuff is all short-term capital gain initially. But then if you kind of
Hmm.
if you just lock up something in a wallet like whatever WMemo or Time or something, your
Hmm.
your principal you locked in there is now like you want to leave it forever. So that will be a long term capital gain. But then the staking or the DeFi earning, each of those is income. Each little thing that comes in, you've incurred income taxes on that unless you do the wrapped stuff. That's the point of doing wrapped.
Wrap transactions like wrapped Ethereum, wrapped
Yep.
Bitcoin,
Yeah.
right?
Wrap memo,
Sorry.
WMemo.
Yeah. So basically, every transaction that happens, the cost of transaction is something that's deductible, right? But during the buying and the selling events, that's when you're probably going to have to do realization, right? Or you're going to have to actualize the capital gains. It's whatever you convert an asset, correct?
Yeah. So broadly, like so, what Zen Ledger does is it'll take in all your transactions from everywhere, on
Yep.
chain, off chain, centralized exchanges, decentralized exchanges, NFTs, DeFi, income mining, staking, airdrops, etc. We'll clean it all
Mhm.
up for you. A lot of times, you will need to do a little bit of manual stuff if you've been like really out there and aggressive doing a bunch of stuff. If you've been pretty simple about it, you just have like a MetaMask wallet, 2 or 3 exchanges. We'll pretty much just have you done in 5 minutes automatically, and you won't have to do anything. But the more complex your transaction history, the more time you'll probably have to spend cleaning it up. But we'll work with you on that. We have great customer service, and we work with a ton of CPAs. And then we will
Yeah.
output to income tax, capital gains, long and short term capital gains, profits, uh, uh, capital losses. Tax loss harvesting, overseas, if you need to, like FinCEN 114, FBAR, FATCA filings. We'll help you with all of that. We'll give you a full audit report. One of my good friends, Luke Riddle, who I flew combat
Mhm.
missions with, he then became the number 30 employee at Coinbase. He didn't tell me about it because he's a dick. And he got very wealthy in crypto, and it found that he used our software and
Yeah.
overpaid his taxes by 250,000. He sent in our audit report to the IRS and said, "Give me a $250,000 refund." And then they promptly audited him. He won that audit, and he got his $250,000 refund because our calculations, if you've put in all the information correctly and kind of groomed it with you and your tax professional, it'll be bulletproof, 100% accurate. It'll tie out to hand calculations of an IRS criminal investigation, cybercrimes division investigator, and it'll tie out to the
Yep.
hand calculations of a Deloitte ultra high net worth practice senior tax partner,
Yep.
or yourself.
So, I mean, I think really, and let's just kind of try to dump down a little bit real quick. But the number one thing that I get questions about too is how taxes work in crypto, right? You guys have to realize that there's a lot of different things happening, right? So, between decentralized finance and the NFT markets, for example, these are all, I would say, Pat, and you can correct me if I'm wrong, these are all kind of treated differently based on the type of activity that's happening, right? So it's not always just capital gains tax, right? Typically, or well, it will be capital gains, but uh, you know, making fees from market making versus buying and selling NFTs, there's different methods of how that works, right? So it's not just like a simple method for quantifying all your tax transactions that happen. So anyways, one of the things that you also have to kind of consider too is that we want everybody to save as much money as possible, right? And that's kind of a big deal. And I think taxes is something, especially in crypto, that scares a lot of people because it is always thought of as kind of a black box. But um, you know, checking to see how much you actually owe and how much you can save based on something that we know one of the biggest expenses of this year that you guys really should take advantage of was the high gas fees, right? I mean, and you guys know this, but some of us are paying hundreds, thousands, tens of thousands of dollars in gas fees. And so all of that is, and correct me again if I'm wrong, Pat, that's an expense of doing this, right? It's something that you can take to your advantage and actually try to make sure that your costs are covered, right? So
Yeah.
I don't know if you,
So kind of like, in a traditional business, you'd you drive around a milk truck, you get to write off your monthly lease of the milk truck, the insurance, and the petroleum gasoline fees. Um, and as you are doing, basically you're earning financial income, you're doing kind of just like financial stuff. Then you would incur costs to those financial transactions, right? There's some amount of costs you incur, and so gas fees are part of that. So let's see here, and as it pertains to NFTs, like when you
yeah,
mint,
mint,
like something like that, the on-chain stuff where you put in 1 Ethereum, you end up with something that's worth zero point 0.9 Ethereum back at market price.
Mhm.
1.1 Ethereum was your gas fee. So right now that would be $300. And that's kind of like a tax write-off, basically. It'll kind of depend on how to categorize it, but
Mhm.
yeah.
What would you suggest to people that are personally trading though? Is it best to be set up as a business? I mean, I know you can't really tell people or give people that type of advice, but does it make more sense to actually structure something like that? If you're doing, let's
It
say,
kind of
less
depends
than
on the
250,
scale.
yeah,
Yeah, and it
250,000 or
kind of
less, right? Probably not.
yeah. So it depends on the scale of what you're doing and how much you kind of need the cash you're generating. So if
Yeah.
you're generating cash and then going and buying groceries and eating sandwiches every day and everything,
Mhm.
and you're kind of a smaller scale, it's different than if you want to operate at kind of a bigger scale and you want to employ, you want to spend money on incorporation, you want to spend money on a bookkeeper or a corporate accountant that understands crypto, and we can
Yeah.
always recommend some of those to you. That's kind of
What
what
I'm
you kind of need
gonna
to
say.
consider. Like if the profits and the income are significant enough that justifies that kind of outlay, then go ahead and do it. Or if you're afraid enough of audits, or you have a bunch of real estate income or stocks, regular stocks income, that you don't want to have $50,000 of crypto income like triggering an audit and then you having to dig through your whatever your real estate income or your stocks or something instead. That we deal with a lot of clients who are very wealthy outside of crypto, and they put 1% of their net worth in crypto, and now it's 20% of their net worth, and now they
Yeah,
have
so
to
it's
just
probably
make sure that's all taken care of.
yeah. So I see this too. Wingman posted something that's actually kind of on point where you have paying taxes on gains and then using tax loss harvesting and breaking even. It's kind of funny. It's great.
Yeah,
But
and you can bank a lot of tax losses so that for years going forward it can eat up profits if for some reason you don't have profits. Like, first of all, profits are awesome and income is awesome, and you just pay
of
taxes
course,
on it. I would love to pay billions of dollars in taxes. It would be great because it would mean I'd be making tens of billions in income and capital gains,
hundreds
right?
of
So
billions of
that's
dollars
fine.
in capitals. Yeah. I don't
Yeah,
disagree with
so
you.
that's okay.
But
Right.
so some of these people, so yeah, it's kind of crazy too because some of the people that are in here are paying $30,000 or $40,000 a month in gas fees, which seems a little bit outrageous, but you have to understand how much money there is actually in this community.
Yeah, that's a lot of
Um,
income they're generating to justify doing that, or else they wouldn't do it. Everyone's smart here, right?
yes. Yep. 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 Um, yeah, it's kind of crazy, but I mean, this place is like this whole entire space is just blown up, right? I think it was 140. What were we shooting for? 100 billion over the next 14 to 18 months in NFTs. Right, that's the expected growth, which is absolutely insane. And this
Well,
kind
no
of
one can predict it, right? Don't listen to any of the
yeah,
market research because no one predicted NFTs and DeFi in
NFTs in the
2021.
beginning,
So you can just
yeah.
you can shut the hell up about your 2022 or 2023 prediction.
I know. And so another thing is too is you're seeing the rise of decentralized autonomous organizations, which is great too. So you guys are going to be super busy trying to figure this stuff out. But okay, so like help me understand here, or at least help everybody here understand what we can do. What are like some smarter methods here? First of all, staying on top of how much you're spending when you're doing crypto, but tax loss harvesting as a strategy. Can you tell me just a little bit more about that and what we're doing? And when you typically see this stuff, you'll usually see like the market dip for a couple days because everybody sells their crypto to harvest tax losses. But again, enlighten us a little bit if you can.
Yeah.
If that's something that you can do. Actually, I don't know if you're allowed
Uh,
to, but we'll see. We shall see.
yeah. No, like tax loss harvesting is a completely valid strategy. Wash trading is generally not. It's frowned upon. So wash trading is when you see a momentary dip in the market, right? Like, so you buy Bitcoin at 40,000, it dips down at 39,000. 2 seconds later, you immediately sell at 39,000, buy it back at 39,000. So now
Yep.
theoretically, you would have one Bitcoin for $39,000, and you would have one tax loss asset of $1,000 that would offset a gain of $1,000.
But that's
So
repurchasing it within 30 days, though, right? Isn't there like a time
uh,
limit on the
so
way that
so
works?
here's the thing. This is gray. There's lots of stuff
Yeah.
that's gray in taxes.
Yep.
So with public securities, if you're trading Tesla stock, that would have been illegal, and if you try to pull that shit off, immediately get audited, very obviously.
Mhm.
You have to wait 30 days, or do the calendar year stuff. Um, Sell in November, buy in January or whatever.
Mhm.
But in crypto, because there is a law passed by Congress and enforced by the Department of Treasury about public equities, stocks, and the wash rule. But
Mhm.
crypto is not specifically labeled in any law passed by Congress and enforced by the Department of Treasury. So you
That's kind of
theoretically
on purpose,
could.
though, right?
It's just they haven't gotten around to it. They haven't gotten around
Okay.
to it.
Okay. Okay.
They
Fair
they've
enough.
thought about it. They wrote it into the Build Back Better bill,
Yeah, the Build
and
Back
then
Better
Ryan
bill.
Selkis called for heads of Gensler and whoever else, and
Yeah.
we'll kind of see, right? Build Back
That.
Better bill is dead still right now, but it could pass tomorrow. We have no idea, and
Mhm.
then things will change from here. But as of right now, today, crypto is not subject to the wash rule. So theoretically, you
Yeah.
could just watch trade all day if you want to, try to incur losses if you want to. You're going to burn up a bunch of stuff in gas fees, and you would just lose money. So it's a very stupid strategy. It's penny
But
wise, pound foolish, basically, or penny foolish,
yeah.
pound foolish too, because it's just stupid all around. But you could do it, right? But then if
Yeah.
you get audited and you try to claim all these losses from all these transactions that happen, a
It's
microsecond
probably
away from each other, there's
probably not gonna
yeah, they'll just
fly.
pull you into federal prison, man. Like it's not gonna hold up. But if you
Yeah.
wait 15 days, there'll probably be no issue. If you sell December 31st, buy back January 1st of the next year, probably be no issue. Certainly, if you wait more than 30 days, there'll be no. So there's a lot of things in crypto that you can take a very aggressive stand on and say, hey, I'm going to do this very aggressive tax approach and try to put
Mhm.
more money in my pocket. Or you can do a very conservative approach and you can say, look, I can see that stocks are traded this way or real estate's traded this way, and I'm just going to do it the same way because I don't want to get audited.
Yeah, so I mean, it just means that you're being a little bit more calculated in the way that you approach it, though. It wouldn't be counting every transaction as some means of tax loss, right? It would say, yeah, okay, so I sold at the end of the year and I bought back, you know, you can't really blame me for that. That's a normal transaction, right? Like
Yeah,
it's
I
not
mean
something where you're trying to take
the
advantage of the
tax code
market,
is
basically.
yeah, the tax code's full of loopholes for people with assets and
Yeah,
income
it
and capital
is
gains to
actually.
drive trucks through. So like you can take advantage of these too. Just kind of realize when you're doing conservative things, when you're doing aggressive things, when you're doing illegal things, right? And then you decide which lane
Yep.
you want to be in.
Yeah, because again, I mean, they'll come back, and they usually takes about 2 or 3 years, right? Their mode of getting through things is what? It's about a 3-year delay, but I think the IRS actually hired what 40,000 new people over the last year. Like they're taking it pretty serious. There's no doubt about it, just because of how much money's been put out there. But I think a lot of that
Yeah,
also has to do with you know how much money we gave out for the last few years too, right? And to collect on that as
right.
well.
Yeah. Also, it's the Al Capone type stuff, right? You
Yeah,
someone's doing dirty stuff, and then they're using crypto for the money laundering part of it, and then you focus on that too because you're pretty sure you can't get them on the drugs or whatever, right? Um,
yeah,
Selling of whiskey, Canadian whiskey during Prohibition, but and the modern case of that is John McAfee. They went after him for SEC, securities violations, and that
mhm.
was pretty much in the open. He was just openly, creating,
Yeah,
felonies. And then part of what they were going to do is go after his income tax evasion, and like a general tax evasion as well, because they would look at his books and get him there too.
Mhm. So I see a couple questions in here about things like borrowing, lending, LP. It's kind of, I don't know if you want to get into any detail about how that works or how it's taxable, because that's kind of a rabbit hole in itself too. But basically, I just, another thing is too to consider is that you guys have already built tools to kind of automate the figuring out of a lot of this stuff already, right?
Yeah,
So
yeah, absolutely. Because it's all structured data. Most of it's on chain, and we can just take care
it's
of it
on
for you.
chain, yeah,
Uh,
especially if it's decentralized finance, which most of us use, right?
yeah,
But you
and
guys have pretty
you're
much every major
investing.
exchange.
Oh yeah, yeah, absolutely. And a lot of the major, like most of the major blockchains, thousands of tokens, uh, over 50 blockchains natively supported, hundreds of exchanges natively supported, and then like all the DAOs, DEXs on each of the chains that we support.
Yeah. So you literally just, I mean, if I remember, you go in, you create your account, set up all your personal stuff, and then you can connect your wallet. You can download all your transactions, connect it to your exchange. It'll pull in all your transactions, and then it's really not difficult. You just kind of punch through it real quick for the different activities that you did, and then you get your basically your tax papers right there, right? So what are you getting at the end of that for just a normal person? And again, I know we kind of covered it off in the beginning, but what's the benefit of doing it that way? And again, how much does it cost actually?
Yeah, sure. Thanks for asking me 17 questions. Um,
Yeah, no worries, dude.
so,
It's all good.
yeah, go to zenledger.io and you can see our pricing there and you can see what we integrate with. Generally, the pricing is kind of free up to $400 per year of reports. So if you need 2 years, if you want to report your 2020 and your 2021 tax report for the first time, you're going to go and buy 2 years of tax reports. So it'll be like 150 times two, $300 to get you squared away for those 2 years. And you can use Monkz 15 coupon for 15% off. So MONKZ 15, all caps
I'll
probably.
post it right now.
Yeah.
One sec.
And
MONKZ 15.
yeah. So what
I
you do
put
is
215, my
you
bad.
log in, you create an account. We don't care who you are. We don't want to know who you are. We don't file your taxes for you. So you can just use a Proton mail. You can use a hash, a unique hash or whatever if you want to.
Yeah.
Or you can just give us your Gmail if you want us to email you helpful tips and whatnot throughout the year. You can go ahead and look up our NFT tax guide or our DeFi tax guide or our crypto tax guide as well if you have more questions here. And then we have a bunch of customer service to help you all the time as well. Email, phone, chat support. And we work with a bunch of CPAs. So if you need to work with an expert CPA in this, we'll hook you up there too. And then so you just log in and you start hooking up accounts, some things like Coinbase or one-click authorization. And others, sometimes you have to create, you have to download CSVs or whatever. We don't have access to any of your 2FA. We only create read-only APIs. We only need your receiving address on your on-chain stuff. So your MetaMask wallet, we never ask for keys or anything. We just ask for a receiving address so we can read your on-chain activity. And then our software will come in, ingest all your transactions and clean them up and do a lot of automatic categorization for you as well. We are US based only right now. We do have Australians and Canadians who do use us. So you can try it out. And if you don't like it, just grab a refund or ask your tax professional to take our full audit report and profit and loss and ask them if they can kind of jerry rig it so it works there. We've had Australian CPAs say specifically our output is the only one that's accurate enough, and so they don't care.
I'm pretty sure you guys got people all over the place using it, regardless, right?
Yeah, anyone that's English speaking and has seen some of our ads. And then Canada, we will launch probably this summer. We're growing like really fast and US focused right now, and it doesn't make sense quite yet to bring on other countries, bring on tax professionals and legal opinions and customer support, because our customer support would have to speak and write Canadian, and that's difficult to hire them. It's a joke, I get it, but so there's that, with their floppy heads and their beady eyes.
For sure.
So that's generally what it is. And so what you'll do once you hook up everything is and my kids play ice hockey, and I'm learning to play ice hockey.
I was gonna say, you and me are Letterkenny fans to the nth degree too.
Oh yeah, we're super Letterkenny fans.
Yeah. So as kids play hockey too, and they're just brutal. It's pretty funny actually, because you
don't take no shit from no one.
Nobody,
so yeah. And then once we clean all that up for you, the outputs are your long and short-term capital gains. So what you put on your 1040, your income. So if you've been, I do love the maple syrup. The income and reports, and then your Form 1 or whatever else that you need. If you want to also report FinCEN 114, FATCA filing, onshore, offshore accounts, like if you're a big baller and you need to do all this stuff because you're getting audited every year and you have to disclose your overseas holdings, we will do that for you as well. and we will give you a full audit report. Yeah.
So let's talk about that real quick, because we actually do have some pretty big followers in this group. And one of the things you guys offer too is access to Mr. Andrew Gordon.
Yeah, right? Andrew Gordon out of Chicago, a lawyer and a gentleman and a scholar, and a very chesty man. He loves the bench press.
Yeah, he's a cool dude. I talked to him quite a few times actually, because we were out there in Chicago. I did an ETH meetup with him twice, and I was to say, what's his name? The kid from Vestigo.
Fraser?
Fraser. Yeah, Fraser Anderson. Sorry. I should have known that because I love Fraser. But
also love squats.
Yeah, right. Fraser was like, yeah, you should, if you get a chance, check out Zen Ledger. Like in the middle of Gordon's speech, and he's like, I'm an investor in Zen Ledger. Like, thanks for the shout out, and yeah, check them out. It's kind of funny because those guys are always trying.
Andrew Gordon should have known better. He should have been hawking.
He should have known better. Yeah, right. I was gonna say, but yeah. Anyways, the reason I say that is because Andrew is actually he's a lawyer, right? So
a lawyer and an accountant. JD,
and an accountant,
CPA, yeah.
Yeah, so he's one of those guys that if you have any issues or if you think you might have issues, just talk to him first before you do anything. You can go through Pat and Zen Ledger. It's not that expensive.
So through our website,
really cheap.
You can buy consulting time with Andrew Gordon through our website, and you can also buy 1 or 2 years of prepared tax plans with Andrew Gordon through our website. And you'll use our software. You'll use their accountants and lawyers that know how to use our software, and we'll take care of you. And so that's not just crypto. That's everything. So when you sign up for those fully prepared tax plans with Andrew Gordon, they are filing your taxes for you. So they're doing your real estate income, your stocks and your stonks and your memes and your NFTs and DeFi. They're doing your full tax report.
Yeah, and so the reason I say that is because they do the whole thing. It's like from soup to nuts, right? And Andrew is probably the most. At least I think he's probably the most well-recognized tax professional lawyer in the space, and the people that he deals with.
He was representing John McAfee, actually.
Yeah, I remember, and he used to say some crazy stuff, man. But that was great. But as it is, like those again, like you got to work with people like this. If this is something where you're making a lot of money, and you're probably young. Most of us are, 20s, 30s, right? So, it's not that hard, you guys. Like, you just take care of it, right? It's one of those things you have to take care of. And I think what you'll be surprised to find out is that it's actually not nearly ever as bad as you think. But in crypto, there's a lot of fees and a lot of costs to doing all this stuff. So you should really,
and it might be painful up front.
Yes.
It might take you several hours and several sessions up front in February of 2022 to get it straight. But after that, the benefits keep rolling out. Like you can log into your account 2 months from now and see, your live portfolio and be like, hey, what's underwater? Oh, I have this token that's still trading, 20% below what I bought. And I'm like a big believer in Phantom right now. I'm going to sell all these tokens that I lost. I'm going to free up cash and buy more Phantom, or I'll go to Sushi Swap and swap them directly for each other, so that I can get the tax loss, and then I can get more of the asset I like. I'm not a month holder yet, but
I'm not yet a month holder yet. You're gonna have to be because you got to buy floor.
I have several ideas that I am shooting at Squid Game PJ over here, and I'm insulted that he hasn't made a couple for me already, personalized ones to spec.
No, I got some, dude. Don't worry. But I'm gonna make you buy one regardless because you gotta contribute.
Oh yeah. I'll buy one. You guys are my people. Yeah, let's fucking go, guys. Fucking do it.
Let's fucking do it. Yeah. But you should be on here because I'm gonna be so fucked this year because we make shit coins just so I can show people how to make coins on ERC20, right? Because you know how I am. I'm like a hands-on kind of guy. This stuff, and when I do my pitches or any of the stuff that I do, and you see my demos and all the stuff I've done in the past, but we've been making shitcoin galore just to test stuff out. So I'm going to be I'm gonna have to go in there and just get my shit squared away this year because 2022 is gonna be a wild one. But okay, so just real quick before we get off the tax subject, strategically, like, what does this mean for us, especially as Monk holders? First of all, you got to be responsible, right? Just make sure that you get the stuff taken care of, and it's easy. You just log into the system, and pretty much everything you need is there. And from then on, just remember that all these costs incurred and everything that comes along with it, you need to take advantage of the stuff basically as soon as possible. Thank you, Moose, for posting that. But yeah, and the code again is Monkz15, all caps, MONKZ 15. So okay, I want to talk a little bit more too about raising capital because that's something that you and I both have done a lot. Actually, that's probably one of the only things I could say I've actually done a lot more of than you, because you beat me on LinkedIn already. You got like 24,000 followers on LinkedIn, right? So you smoked me at that. Now you've passed me there, right? You're just too popular. But let's talk about raising capital, right?
Yeah.
I've done it quite a few times, and I've done it for different companies, and it's been either through private parties or through banks. Actually, I've done a lot of stuff through banks when I was doing mortgages back in the day. But my favorite thing, and I think one of the things that is probably prolific right now and is probably going to see a lot more of this stuff, especially in crypto, is venture capital and decentralized venture capital too, right? So coming into this, I think when we were at Speaker, we had raised something like 22 million, I think, after all, or no, it was like 17 million, I want to say. And then, that's pretty big. You're almost at that range right now where you guys are going to start raising like, ridiculous amounts of money. But let's talk about this because you put out articles all the time about what you learned from raising capital. And I don't want people to think that it's like something that's outside of their reach. It's actually more of a confidence in yourself and confidence in what you're doing thing. And I don't know if you would necessarily agree with that because there is a little bit of know-how and knowledge that goes into it, but let's talk about it.
I think you just start lying. You keep lying. If they catch you in the lies, you lie about the lies.
You lie about the lies, right? Yeah, you get the money, Lebowski. Get the money. Where's the money? No, but for real, when you guys started, what was your guys' first round and what was it like?
Yeah, so I had it's kind of like being able to raise capital is kind of a confluence of several things, right? Like your business idea, the times you're in, your business model, who you are, your experience, your team, their experience, your potential customers, all of that, right? So it kind of comes together. So for us, it was in summer and late 2017, I was talking to a bunch of really successful cryptocurrency investors, the ICO crew, and they all had all these huge gains. They were like $1 ETH, $100 Bitcoin people. They're like, man, what am I gonna do with all this cash?
What am I gonna do with all this money, right?
So that was a problem. And they were all like successful exit, smart people, could code, had worked in finance, and they couldn't figure out their taxes. And their accountants and their lawyers couldn't figure out their taxes because it's late 2017. And like Bitcoin.tax was out, but it was literally just like you create a spreadsheet, and we will give you the accounting logic that would run that spreadsheet rather than you coding up the spreadsheet. And we'll try to look up some prices for you. And no customer service, no UI UX, no automation, right?
Nothing.
And so the opportunity was, hey, the IRS is suing Coinbase. There's millions of individuals coming into crypto in the United States. There will be hundreds of millions of people globally coming into crypto over the next 5 and 10 years. I'm a finance guy and a tech guy, a fintech guy. And crypto is like a really cool space that no one's going to keep me out of. If I try to go work at Goldman or Google or something, I probably can't get hired. Very difficult to get hired. But I can just like start a company, and I really want to start a company because I hate working for other people because other people are terrible. And so that was the general thesis, right? So that was what I was going to do. And so like so that's clearly a business that fits inside a box. There's not a lot of technical risk. You're not saying I'm going to build a next cancer drug or a rocket that will fly and land itself, or general artificial intelligence or anything like that. The technical risk is not there, and the need is there. It's obvious. Anything you do in crypto, taxes, accounting, anything you do in Excel is a SaaS business, and it's a profitable SaaS business. It is annual recurring revenue, monthly recurring revenue, high long-term value of the customer, LTV, and so it was worth a go. And so we were able to raise capital.
Andrew was one of your guys' first ones too, right? Andrew was one of your guys.
So he was an advisor, but not an investor.
Oh, that's right. Yeah.
He has given a lot of advice worth a lot more money than I could have ever paid him, and that's why I gave him equity instead. But that he's been great, and now I send him a lot of money because I allow people to buy his firm's time on my website, on my hard spent Google AdWords and Facebook ads money. So we raised capital that way, and my pitch was like, hey, I'm a guy. I have an interesting background in the military and finance.
Yeah, you're a vet.
I understand this problem.
Yeah.
So the general questions you have to answer for an investor are: is this person smart? Are they hardworking? Will they steal from me? Are they a leader? Can they hire people? Are they honest, or at least honest to me? Depending if you're going to get into cannabis and all that stuff, like you, fucking degen, PJ. Who are you going to lie to, right? And things like that, right? And is the team sufficient? Not just one individual. You're not pitching you're pitching generally as a team for a startup.
It's a unit. Basically, it's a unit.
Yeah. You don't have to go this way, right? So I've written a pretty long article about this that I will share here about capital raising. It is unnecessarily long because I made it semi-autobiographical so that it would be more useful. I could have written 1,000-word 3 bullet point article, but then it would be no different from any other one. So I wrote one that kind of like showed you how I weave my personal story into things. Honesty, sarcasm, all those types of things that kind of show out. So go ahead and read that. If you have questions, you can always just ping on the Twitter thread. I haven't added Series A or Series B insights there, but that'll take you from 0 through
pretty much
6 million raised. So it was our first 3 capital events. So convertible note and priced round.
Yeah. So yeah, real quick. Hey, do you know if that code's gonna work? People are trying to use it right now. People are trying to get in right now.
I believe it is. If it doesn't, just ping the chat, and we'll just credit your account. Like, so if you need to, just buy with your credit card full price, and then just ping our customer support, and we'll give you a 15% refund. Okay. And it'll work for future years too. So if you want to buy 2022 right now, you can. If you need to buy past years, 2017, 2018, you can. We offer a full refund. So if you decide you don't like us, no questions asked, full refund. We'll generally just ask why you want a refund. Like, oh, you didn't support, this token or that token. We'll be like, okay, fair enough. We'll support it in March 15th or something if you want to hang around.
Is that 15% refund tax deductible?
Bro, you can't get a tax break.
You gotta know who you're talking to here, right? Like,
yeah, you guys, just because you printed a JPEG doesn't mean you can take a tax section on it, guy. But the tax prep is tax deductible, which is because the schnozberries smell like schnozberries.
Yeah. So, but yeah, this is kind of interesting because you and I always cross paths, regardless of just our history, right? But we have a lot of friends that are in the venture capital space, and it's kind of interesting. It really is kind of a small group of people, especially here in America. But well, depending, it's kind of expanded a lot lately, especially for crypto. But what did that look like for you guys originally? Because you actually introduced us to someone who ended up taking us to hedge funds and all these other places that we would have never expected to go. But yours was a little bit different. You had some pretty strategic people, but for the most part, you were just out there hustling. And I think actually you have a pretty funny story. I don't know if you're allowed to tell it, but you got your investors to an email, cold email. He was hustling.
I'm not allowed to tell that one.
Yeah. Okay. So it's nuts. But what would you describe? Yeah. What do you describe that process as? Like,
yeah.
how hard are you working? Right.
So like, I'm like, I don't know why I'm able to like get superior results. Like, so basically, cohort analysis says Zen Ledger is like a top 0.1%, 1 in 1,000, 1 in 10,000 business at this point, because we've survived 4 years through tough times. We're going to go raise Series B, millions in revenue, growing at plus 5x year over year. So not a lot of companies ever get that. And so like I never know what that's like. It's kind of aw shucks, because I'm not like 7 feet tall and playing in the NBA, and I know exactly why I'm in the NBA, because I'm a genetic freak that's 7 feet tall. But there's some amount, like it is always very hard depending on who you are. We are going to have an AngelList syndicate probably, so I will let you guys know, because you're my people now. I will be a Monkz.
Yeah.
I will have monk face next time. Yeah. So it is a lot of work, and what makes the work hard is that there's just a lot of difficult diligence and art you have to do. It's the art of the pitch. It's the art of the financial projections. It's the art of the pitch deck. It's the art of the business model. It's the words you use, the tones you use, the people you get in front of, the people who introduce those people. It's the promises you made, and if you up on them all the time. People said no to me. I'm not going to invest in 2019, and I just gave them quarterly updates. And when I was raising in 2020, they said, I made a mistake not investing in 2019. You made promises and you met or exceeded all of them. So I am cutting a check right now without like any more pitch. Here's the check. Just tell me where to wire it. You don't have to pitch me this time.
It's crazy because you and I, we kind of started along the same times, but you have just been consistent, and that's kind of the thing here. It's like your consistency and your persistency is probably one of the things that's definitely most admirable. And I think that's what most of your investors say too, right?
I mean, like this is
just constantly.
This is not life and death, right? So like my previous life prepared me for this. Like unto my death, I was going to fly a helicopter to come out and get you if you were injured. Like within 10 minutes, we were launching. And I was going to try to figure it out on the way in and fight my way in, fight my way out, and get you. And if we die, we die. That was like, that's okay. That's what we signed up for. But and so like this is not life and death. Like iBanking wasn't life and death. Got through that. Amazon wasn't life and death. Got through that. Startups is not life and death. Like if this company had failed and it I almost did a couple times, I would have gone and done another startup, and then one of them would have worked, because I was going to stay in the game long enough. Like there's some minimum level of competence that you need to like be above to play this particular game, and I have full confidence that I'm above it. I just need enough. I just need enough play enough hands, right? But it's not. So larger point is this is not a path for everybody. Entrepreneurship is a path that almost everyone can do. Like if you just sell generic sodas and you do a lot of it, you can become quite wealthy. You can get the Kirkland's contract for generic sodas, right? And or the Costco and do really well. Yeah. So like hustle and bootstrapped and scrimping, saving money, those are great paths to entrepreneurship too. But if you want to do something where you have to pay experts up front for their time and their decades of experience, and you need to do marketing and you need to do marketing research, and it's going to take you a while to build something, then that's exactly why venture capital was invented. You can mortgage or sell your house and then use that money to do the same thing. You've just invested in yourself. Or you can go ask other people who are in the business of investing in you, in entrepreneurs for that capital.
Can you disclose how much you raised in your Series A? It's public, right?
6.7 million. So I've oversubscribed every round.
Every single round you guys oversubscribed, right?
I'm extremely seductive and apparently very bad at pricing the rounds. They're too cheap.
Which is kind of funny, but you guys, the next thing is too, as soon as you land one round, you're basically just primed for the next one too. So you're always having to think about the next round.
It depends on your startup in the market. Our Series A was ridiculously painful, and Miko Matsumura complimented me on how hard I worked to get it done. And I was like, "What do you mean?" I just kept going until I like successfully did the round. And I was like, what do you mean? Would other CEOs have just quit? And he's like, yeah, I've seen a lot of people just quit.
Yeah. It's fucking brutal, dude. And it is. It's tough, man. Especially like I would say probably one of the things that you've done best, better than anybody else I've seen too, is you bootstrap hard. You and the family, everybody. You basically just put your head to the grindstone and just did what you had to make it work, and that's how you survived, right? You've done
Yeah, we have a Honda Odyssey, we have a Honda Accord. I do not own a watch, let alone a nice watch. Yeah.
Yeah, but I mean, it's still there's a decent amount of work-life balance that you have too, which is kind of admirable. But with that being said, did you guys actually do like seed round? Did you guys go on with traditional seed capital, or was it
Yeah,
just
so
kind of
we
like
did two convertible. We were probably the last startup in the world to use convertible notes. Everyone else used safes. So we had a convertible note, and then we had a price round in late 2017, December 2019 was a priced equity round, and then August 2021 was a priced equity round as well.
another price equity round?
It was Valley Super Seed, but outside of Valley A. And this next round will be a Valley A, but a Series B.
Series B.
Yeah.
That just means that you guys are getting primed for spotlight.
Yeah, you switch investors.
You guys are,
so like
yeah.
so like convertible notes for Series
basically.
A can be the same kind of investor, but Series B is more like, hey, I take you from Series B to IPO. Series B, C, D, E, IPO is growth investors.
Yeah. And so it's just a little bit different, but I don't think a lot of people understand how that type of investment works. And then we did a convertible note too, by the way, but I haven't done safe. And to be honest, I'm not really too familiar because it's safe access for what is it?
It's a convertible note with no coupon, basically.
With no what?
No coupon, no interest.
No coupon, no interest. Yeah. Okay. Yeah. So yeah, basically what happens is venture capitalists will come into your company, and there's a couple advantages to an early company. Let me see if I get this straight, if I remember correctly. But here's what I did. I'll explain what I did. I set up a corporation in Delaware, right? Because every venture capital company will just have you do that anyways, right? And you guys were too, right? Were you guys set up in Delaware or?
Yeah, Delaware.
Typically, yeah, everybody sets up in Delaware, right? And you just basically file with the state. And I don't know if you guys went this route, but we went a C Corp and converted it to an S Corp and then filed what's called a 2553. Well, you don't convert it to an S Corp. You basically file what's called a 2553. And that 2553 gives you what's called an S Chapter election. And that S Chapter election is one method for early entrepreneurs to basically save money from paying taxes, because rather than paying income taxes when the company takes in funds and then pays taxes when it pays out its employees, the money that comes into the company sits in a holdings, right? It's called a holdings. And then you're allowed to pay employees, but then at the end of the year, what happens is the company looks at how much money it's made, and then it pays taxes on the profits. So what a lot of people do is they'll have income or expenses that will be expenses for the company, and it will you can write that off for the most part, and that's where you see a lot of the big tax deductions come from, the way that they structure corporations. But venture capitalists, if you start early like that, one of the keys to being a subchapter S Corp is you can't have other corporations as investors. They have to be individuals, right? So what'll happen, and what makes it very easy for venture capital companies to do, is they come in, instead of taking shares in the company, they will basically take a loan out. They'll let you take a loan out against the equity of the company at a future date, right? And that's what a note is. And that's what a convertible note is, because when that note comes due, the investors are either going to convert into equity or they're going to ask for their money back plus interest. Was that a good way of explaining it, Pat? Was that a decent?
We didn't go that route. We didn't have the high speed people that you did. We just we didn't legal zoom it. But
I did that myself, dude. I did all of that myself. That was no high fee legal shit, dude. I knew how to do this stuff. I fucking learned how to do it, right? I mean,
that's Ozark.
that's the right way to do it. No, that's the right way to do it. That is the correct way to do it. I'm serious. I'm dead fucking serious, man. So yeah, man, I would love to show this to everybody too about how to structure this stuff. But again, that's how you would structure a corporation basically, and prepare it for. I would say most of the tech stuff, most of the tech capital, is kind of structured that way. It's usually a C corp, or not a C corp, but like either it's just a subchapter S corp or an LLC with subchapter S corp status, right? But that's a lot of stuff that you see. But how did you guys do it? How are you guys set up? Is that something you can share?
Just straight up Delaware C corp.
That's Ozark shit right there.
That's what I said. Dude. No, he's just typing what I said. I'm the quote.
And the offices that they had in Ozark when they started that stuff was like right across from where we were in Chicago. Dude. Yeah, it's fucking dope. But and that show's great, by the way. But yeah, so yeah, so that's what I did. Basically, what happened was I set up the corporation. We knew that we would be taking in income, right? So we didn't want to pay tax on it, but we had a really expensive team that we wanted to basically take advantage of the, right off of that, right? So we saved money because we were charging hedge funds at the time for capital. Like that's how we were making money. We basically had fees coming in from different funds, but that's how we structured it basically, and that allowed us to convert out of the S. What would happen, and the way that this would work is we raised a couple $1 million up front. Then what would happen is when we go for our next large round, we would basically lose our S chapter status, convert the Series A investors convert the seed investors into shareholders. Or would it be shareholders? I think it would be, right? Would they become shareholders, or they would become
preferred or common? But yeah, I think they would be shareholders regardless.
Yeah. And typically, what happens too is they'll have some kind of like stipulation about your board, right? So they'll come in and they'll be like, oh, hey, we want 2 seats plus what's it called when they sit on the side? It's
board observers.
Yeah, an observer, right? So they'll say, okay, if there's 2 founders, for example, they'll always try to level it out. So it'll be an odd number, right? And then there'll always be someone called a board observer who is basically their fill-in in case they can't be there. So when you talk, and it's usually if you have multiple investors in a round, which is pretty typical, right? I mean, how many investors do you guys have in your first round? 3? 2?
So seed, I clubbed things together. I've crammed people down and oversubscribed every round because I've always valued the next incremental investor and their life experiences and their whole book of contacts. I always wanted to bring in extra people.
Yeah. So then let's think. So I think when we came in, we had 8 or 9 different groups originally, and some were pretty small. They were like $50,000 checks, which is pretty small.
Yeah.
Usually you're just doing that because you're trying to.
Yeah, you'll take in like 10, 20K checks just because you want their time. Like if it's generally someone who you want to pay for advice, but you have no money, and for some reason they decide to pay money instead, and now you get their advice.
Yeah, it's kind of weird how it works, right? So like people will give you a small amount of capital, like $50,000, and then you'll basically pay them back for their advice for that, right? And it's kind of weird how it works, but by doing so, they are basically in your company, and you can kind of, you wouldn't necessarily like bannerhead that, but they're going to introduce you to people, and they're going to put you in front of people that you want to talk to and shake hands with a lot of times, right? So you will have a lot of people that approach you for that kind of stuff, but you have to be very selective about, especially if you have a good idea and a good business model.
Like 1 or 2 strategic advisors is great. 17 is a gong show. It's a clown car.
Yeah. As soon as you start seeing companies that just start listing advisors too like crazy, then you know something.
That's Theranos.
Yeah, exactly, right. Or Miko gets hit by that all the time, right? Like he's always constantly added to fake pitch decks and stuff, right? That used to be a big problem.
Oh yeah, there's fake and there's real, but yeah, like all us crypto people. Like I'm a crypto CEO that's raised capital, so like I have to do the whole like Afani, like 2 phones, Google Fi, like all that stuff,
Yeah.
But so they can just right click on my LinkedIn profile and put me on their advisory board.
Yeah, and it happens too. It's kind of weird, but people are out trying to get in front of people. They'll kind of sit on your shoulders and do that stuff. It's nuts, but it's hyper aggressive too. And it's really weird how that whole space works, because a lot of it is about I don't know, would you call it like a loyalty to each other? Like those venture capital groups all talk to each other, right? Especially when they're about to make a deal. And that's one thing that you'll do is you'll actually have investors talk.
It's a comfort in numbers thing, and a diversity of kind of like a spreading of responsibility and due diligence, right? So you can't know everything, and you can't know everything about every industry. And so you just have to pick other people in the industry you trust over time. And so if you hear that, Joe's in the deal and Joe did due diligence, you call up Joe, you go, hey, are these guys legit? Joe says yes. And you go, okay, I'm in. You don't do any more homework. You just trust that Joe did the homework. And then on the next deal, like Joe's a biotech guy, and then you're a crypto guy. Joe doesn't know anything about crypto, but you say, yeah, it's good to go. And he goes, okay, I'm in.
Yeah, you get a lot of that. It's just due diligence. It's how they do due diligence. And you'll see a lot of the same people talking. And actually, you've probably done a lot of due diligence on behalf of investors too, because they used to call me out all the time to go look at stuff. And I would fly out to Boston and look at cool new shit that's getting built and get my.
I tell them to fuck right off and do their own work, because I'm operating this company, man. I don't have fucking time. I'm at like kids ice hockey and
I see some of the cool stuff that
working.
Sure. Oh man, yeah. I guess that's what you're good at, right?
Unless you want to make me a venture associate and give me carry, then get right the fuck out of here.
Yeah. All right, so I don't know, we covered quite a bit, but so I had a couple other questions in here too for people. Do you guys accept Solana wallets? Are you guys actually on Solana yet?
Oh, I can't keep up with the pace of integrations. I used to be in product, and now I do not spend as much time in product. So if we do, here's the thing. So here's a cool story that'll relay the bona fides of the company. So Ava Labs reached out to Deloitte, and they said, hey, Deloitte, we'd like some corporate accounting, because we're like the number 12 token in the world, and a nation unto ourselves. And Deloitte said, how about you use Zenledger? I think they would be better suited to work with you rather than us. Our ultra high net worth practice has used Zenledger for 4 years now. So talk to Zenledger. And so we talked to Ava Labs. They really liked us. If we do another round, I would hope that their Blizzard fund treats us kindly. And they introduce us to the top 5 projects building on Ava, Trader Joe and a couple others that we're working with now. And so we're going to take care of the whole Ava community, like a big, nice, friendly hug for all these guys to make sure they're all taken care of and all, just good to go. Right. And that's the whole point, is they'll just come in, they'll be, they'll be easily taken care of, all the NFTs, all the DeFi, all the income, all the capital gains, because we've worked with that Ava team for in Slack, and they've told us, here's this, here's that, here's testnet access. Oh, here's how you account for this. Here's how we do it. Here's the file format. Here's how we categorize this thing. And so it'll be lickety split, great, and taken care of for you. And that taught us a lot of lessons for all the other EVMs. So we will go ahead and knock down Phantom and Sol next. We've obviously been supporting Ethereum for a long time. And Algorand invested in our last round. So, that's 2 of the top blockchains that are friends of ours. And so I believe Solana will be live. It'll 100% be live and bulletproof before March 1st. March 15th. So sometimes if we don't support something, ping us and we go, hey, sorry, we can't have everything right now, right? But in a month, come back, we'll ping you, and then it'll be up in a month, and you just get your taxes done then, right? And then going forward from there, you're all set, and you can do your portfolio tracking and your tax loss harvesting anytime throughout the year. You just kind of keep it updated. So it might be painful this year to get started the first time, but then next year it'll take you 4 minutes, and the year after that 4 minutes, right?
Yeah. This year I'm gonna get Yeah, I just did so much already this year. It's crazy. All right, so if you guys look on that page I just sent, it's called Exchanges, but it's got all the wallet integrations and different chains too. So just take a look at that one, and you can see the different blockchains, wallet integrations, as well as exchanges. But anywho, I know you're not feeling well. I do appreciate your time. Is there anything else or any questions that anybody might have?
Yeah. So if you get rugged, you can claim that as a loss. There's IRS guidance. What?
No. I know. This is exactly. Yeah. Don't worry. I mean, trust me. People are on here all the time talking about getting rugged in the NFT space because you know how messed up these people are. Like, I don't know. It's 2017 a lot all over again, right? It's just been nasty.
Yeah.
Oh God. Anyways, so what were you gonna say? Sorry, I didn't mean to interject.
So part of the rugged is it's a little gray, right? Like some of this will end up in court. The Bored Ape Yacht Club dude who lost millions of dollars, like he's gonna try to claim that, and maybe he'll lawyer up and try to do something about it. If you lose your wallet in the lake, like that's probably not gonna fly, right? They'll come to your house, they'll see you have a house and a car that are nicer than your state income, and they're not really going to believe that you lost your crypto in a lake. But on-chain stuff where it was stolen and it's clearly like not in any wallets, connected to your Coinbase and your Gemini or your MetaMask, and it keeps hopping farther and farther away in the dark web. Like you can claim those at a loss. There's some different ways to account for it. There are like various ways to read around it. And so you can claim loss sometimes, other times you can't, which kind of sucks. So I kind of like can't give you like very straight guidance here because it's a bit gray. But if you lost a lot and you've accountant and lawyered up, and you're willing to fight that fight, then you can, like Andrew Gordon will go to bat for you, right?
It's not expensive. Well, I'm just gonna say compared to what people think for having real legal representation, Andrew is not expensive at all, right? It's not.
Yeah, he's not a white shoe firm, whatever that means.
Yeah, whatever that. Yeah, I don't know the terminology that they still use for it, but yeah, it's not expensive. It's not nearly as expensive as you would think. But anywho, all right. Any other questions, guys?
Our software takes into account gas, long-term, short-term capital gains, trading fees. It does your federal returns, doesn't do your state returns, but you can generally figure out your state returns really easily from federal.
From federal.
We can do losses. We can do stolen. We can do donations. 503. We can do income. So like you're doing services, marketing services, you get compensated in crypto, or you're kind of operating a business and you go pay someone for some goods or services in crypto. We can handle that stuff as well. Airdrops, NFTs, income flow from NFTs, DeFi, mining, staking, Uniswap 3.0, all of it.
Oh yeah. All right, guys. I don't see too many more questions. Let me see here. So far, yeah, don't worry, Huckman. Hopefully, yeah. So far, you've only made that much, but trust me, it'll get a lot better. We've learned a lot too this year, but yeah. What about LP fees? Do you guys do LP fees? You guys do, right?
I mean, like Uniswap 3.0.
Yeah, not just Uniswap. Yeah, but it does, right? You guys do.
Yeah, like you're talking about liquidity pools.
Yeah, just any liquidity pools. But you guys can.
Sorry, we were talking about other stuff, and LPs to me generally means limited partners and investors, venture capital firms. We do liquidity pools.
Yep. So that's good.
But again, be patient. Some of this shit is ridiculously complex. So if we don't handle exactly the flavor of liquidity pool you're doing now, we will get it done by March 15th, April 15th, October 15th, or something. But like it's all stuff we know we have to do and we want to do, and we will get to it in order, right? But it's just there's been such an explosion of breadth, depth, and complexity.
Products, just the number of products out there is just insane. I'm going to post this one more time, but this is basically NFT crypto taxes. When you read this, don't be scared because it kind of sounds like everything is taxed. That's not what you should take away from this. It literally is just stating that you can write off a lot of the stuff that's involved in your everyday transactions, and not Tornado Cash. I don't think they're doing
So here's the other,
Tornado.
like, here's
Yeah.
the problem with
God.
stuff like that is that, like,
Yeah.
you can't eat crypto, just like you can't really eat dollars. Again, it's the Ozark problem, right? Like, you'll pop up eventually, right? Like, an IRS agent will come out to your house and say, "That's a nice house. That's a nice car. You stated you had, $10,000 of income last year. Like, we're gonna have conversations now. They're gonna go through your garbage." So that's like a difficult thing. If you're in Puerto Rico, if you're in Belize, whatever, you're just not our customer. That's fine. Like, we're not gonna be able to meet everyone's needs. But for the most part, because the yes or no question is on page 1 of the 1040,
Mhm.
and every US-based exchange, every fiat on-ramp is KYC AML, and every major cryptocurrency exchange in the world has created a US arm. Binance US, not Binance Malta, FTX US, Huobi US, right? Those are all going to comply with KYC AML, and so is your bank, right? So I'm pretty sure at some point your Bank of America statement is going to be searched for Coinbase, Gemini, Celsius, etc. Wire in, wire out, and so there's
Actually,
just like,
oh, sorry. No, finish. I didn't mean to interrupt you.
yeah, there's just a long list of paper and electronic transactions that make it like pretty risky to do this stuff. And I hope you guys all just have tons of gains, tons of income, tons of capital gains, and have to pay tons of taxes, right? Because you get to keep
Just make
70% of
money.
all of it.
Yeah, you got to keep
Yeah.
most of it. So, okay. So, real quick, there's a question on here because this is something that's kind of hypocritical, especially for what we do here. But it was asked a couple times. You'll see it getting a lot of thumbs up and a lot of people pointing at it. But how do tokens created passively by NFTs work tax wise? And I pretty much believe this is the same thing as
Yeah,
airdrops.
income.
Airdrops, yep, it's all considered income. If you're able to
It's
sell
income.
something for a profit,
Yeah. Yeah.
anytime you're
It's
ever able to sell anything for a profit, then it's considered income. So you
It's
have to think
income at
about it.
time of receipt and capital gains or loss when you dispose of the asset.
But it's
So,
not it's not a bad thing though. People have to understand that. Yes, it
yeah,
is
free
taxable,
money,
but you're making money. That's the point.
free
And
money.
that you have to think about that way, right? Like if you
Yeah,
want to have income in the metaverse, yes, it sucks. Like we know Uncle Sam is just a pain in the ass, right? And death and taxes are the only two things, but let's just be real, okay? I'm just trying to be straight with everybody in here. Everything
yeah,
on chain is visible, all right, guys? Like, you just have to realize that, okay? For the most part, right?
yeah.
So that's
So,
a big chunk of
okay,
what happens here. So
yeah, a couple questions here. So, gifts, like, again, like the Tar roof scene in Shawshank Redemption, gifts are tax deductible. So you can gift people and you can receive gifts in crypto or dollars or uncut diamonds or art.
yep,
It just has to be below a certain level. Above that level, it's income, right? And woe is me, someone gives you a Lamborghini, you have to sell it for cash to pay some of the taxes, and you buy yourself a Porsche instead. Tough shit.
yeah.
Um,
So
uh, um,
I've seen another question
yeah.
on here too about what about
But
buying
let
some
me
airdrops?
explain this
So
a little bit more, PJ.
yeah,
Let
yeah,
me
yeah.
let me
Okay,
explain
okay,
this a little
sorry.
more. So you get tokens in. There you have $100 of value. That's income of $100 at time of receipt. So depending on your income and if whatever, you have to pay $30 of taxes. You have $70 of income from that $100 airdrop to you. And then you hold those $70 of tokens going forward. Say those $70 of tokens go up to $200 of value, right? And then you sell them after 18 months for $200. You now have $130 of capital gains over 2 years. You pay taxes on those $130 of capital gains as well.
Yep.
But what you're left with is, probably $170 of tokens now. You had to pay income tax, you had to pay capital gains tax, but you have $170 of tokens you didn't do anything for except buy the NFT up front, right? And you can probably sell the NFT now because there's an income stream attached to it, which makes it more valuable.
Again, yes, it's an income stream. So anytime you're making income, that's generally what they're looking for. But it is kind of tough too. So how do they look at it? Like if someone airdropped me tokens and it was a gift, but it's like, say it turns into $15,000 worth of tokens at the end of the year. I received that as a gift. I have not sold it. I have not transacted it. You still get taxed on that?
So the government's not going to come in and know that you need to pay this or that, probably, for the most
Exactly.
part.
Yeah.
But it is your responsibility to disclose it. 3 years later, 10 million, they'll just have you knowingly evading taxes 3 years ago, and that's a felony. It's not a oops, pay 6%. It's a hey, pay a huge fine or you're going to federal prison.
Because
Like
it's
so
not like a
that's
house. Like your house can gain equity. You're not going to necessarily pay up front. The tax.
yeah, but you pay property.
So you'll get reassessed.
all the
But
time.
yeah, you pay property
yeah,
tax.
yeah.
True.
Sorry, what was the core of your question there? It's
Just if it's an airdrop, for example, where
yeah.
they airdrop
So
coins.
there's rules on recognizing that airdrop. Like if you didn't want it, if it's just like 8 cents a shit coin that came in your MetaMask, and you're like, get that the fuck out of here, and you don't ever claim it, like no one's gonna know that 8 cents came in your wallet. You don't have to claim that, right? ENS, no one's gonna know. What was the other big DeFi airdrops, right? Uni, right? They won't necessarily know that you got it. But if you ever get audited, it'll just be a blinding white beacon. It's on chain, it's right there, and they can just see if you paid income and capital gains on it.
Yeah. Secondly, too, anytime you make an exchange, it's a taxable event, correct?
It's potentially a taxable event. It depends on cost basis and everything else.
Okay. So, but that's what they're looking at is basically, again, if it's on chain, it's public.
Yeah.
But
And it's like we're here for the income, right? Like you did this specifically for that. So, hopefully you guys get past the, I can't afford to, pay a couple $100 extra in income because like it matters to you for this week or this month. And hopefully you're getting into the place where you're like, yeah, you know what, like the audit's more painful. Like I make enough income, I have enough cash on the side that I would prefer to have this all buttoned up. You can be extremely aggressive with your tax treatments. You can be like, I'm not going to give the government an extra dollar. But like, everyone's on the books, right? Trump files his taxes. Warren Buffett files his taxes, right? There's very different treatments and theories on what they do, but they file their tax returns. McAfee did not.
Yeah, I think honestly, I just think it's something that scares people because this is kind of new to them about how this works. And you and I both come from kind of different areas of finance, but working hedge funds, everybody has methods or more expensive means of filing taxes elsewhere, or there's a lot of loopholes. We saw a lot of crypto people actually bounce to Puerto Rico, right, because of the tax treatment that they had there. And it's kind of weird because here in California, the Franchise Tax Board, I believe, is the most litigious tax organization in the world, right? I think you probably.
They have thousands of investigators. They audit every more than whatever $10 million a year, and they have to do a random smattering of other people as well. They are legit going after a lot of people because they need to fund after school programs and whatever else, and they can't print dollars, and you can only issue some. So they go after.
And they pay a pretty hefty fee for people when they don't pay too. They're aggressive as hell. They will pay you to basically oust people for unreported taxes. That's how vicious the California Franchise Tax Board is. But
and so like you don't pay taxes on unrealized gains. So if you bought Tesla stock today and you never sold it the rest of your life, you never pay taxes on it again. But then why the fuck did you buy Tesla stock? The point of acquiring a financial asset is to use the resources it garners at some point, right? So if you buy a dividend yielding stock or you buy a bond, you've bought it specifically because it'll be worth more dollars now than before. Or if you buy Bitcoin, you're saying it's going to be worth more dollars, or the dollars are going to be worth less. Or if you buy a Monkz, you're saying like this income stream and the art and the community or whatever all have value to me, right? So that's the point. You're not going to buy and hold till you die unless like for some reason you have all these kids you want to pass on stuff to, I guess. So I guess I don't want to be judgy on your rationale, but like hold to infinity and the heat death of the universe isn't a great investment strategy.
Yeah, straight up. And what Freed said is true too. I mean, I don't know if you remember that era. I think that was the biggest word of the month. It's kind of funny, but we know, like, you got to kind of understand this too, like, especially when you're dealing with, I don't know, let's say high net worth trading funds or any kind of large firms. They all kind of feel the same way, man. We know what the government was doing with PPP loans and, the PFP and all the crazy stuff that happens, but unfortunately, it is just one of those things that's kind of necessary, right?
Yeah,
But you have
and
to
so
deal with it. You have to be.
you can shop around the world for your tax jurisdiction if you want to. You can move states
You can
from
move, yeah,
California
like
to Texas. You can move to Puerto Rico. You can move to Canada. You can move to Belize. You can create a company somewhere else. Like you can arb these things if you want to. Um, some investments you need to think about the taxes. Other investments are good enough that you don't care about the taxes. I would say NFTs and DeFi and crypto. If you do it right and you stay in long enough, it just kind of blows through the things like that. If you're only investing in muni bonds, you really have to care about the taxes and the accounting. Like that's the whole
yeah,
rationale of it, you know?
yeah, it is. But I mean, again, we kind of sit on here at night and we'll talk and we'll look through liquidity pools and positions and stuff and a lot of stuff that we see. Um, and we just know that carried with all of the income that comes in and stuff, you have to just be aware of what you're doing. And anyways, that's why I say me and Pat have a really, really long history of working on stuff in the space of working with each other for the most part. I mean, shit, it's been quite a while now, right? Even though we've been friends for what, 4 years? Yeah, about 4 years now.
We don't talk anymore.
I know, right? But yeah, so again, I just I just wanted to help everybody out in the community and just let you guys know it's actually not that bad. It's nothing to really be that scared of, right? You have a lot more advantages when this stuff is all automated and just kind of does it for you. That's why I was really excited, kind of share with you guys because everybody asks all the time about taxes and how it works. You guys kind of hear my stories and stuff that we're doing, and then as we're making liquidity positions or if we're following certain trades or I mean, even if it's speculative, basically Pat is what I've used Zen Ledger basically since they started. So, and again, we've just been really good friends. We talk every single day. This is
We got
how
all the
he's
OGs
also.
as clients, man.
I know. And what I was going to say too is that you and I kind of beat to the same drum on we're probably a little bit more in the professional financial side, but on LinkedIn and other places. So, we kind of know a lot of the same people, deal with a lot of the same people, have a lot of the same friends in the industry. And like I said, you're probably going to be, well, you guys are probably already talking about how large the organization will be, but, a couple $100 million in the next year or two.
Yeah,
Right?
and so we probably will do an AngelList syndicate. I'll come back and
Yeah.
talk to you guys. I'll be monk faced at that point. If you guys want to do Ozark shit, then you
No,
can use our software, I suppose.
like that's what we are, and this is kind of like what homies do for homies, right? Pat and I, I mean, we just literally just talk shit to each other all day long about this because we're in the thick of it, right? And Pat definitely is in the thick of it right now, so he's dealing with a lot of these big financial players that that are making decisions that are going to move trillions and trillions, if not quadrillions of dollars into the marketplace over the next 10 years. So. Anyways, Pat, it's always a pleasure, bud.
Yeah, man.
When you guys do open up for AngelList listing, like just let us know and come give us the drop on that in our alpha group.
Yeah.
Because we'd be more than happy.
Yeah. So
I know.
Come on
you
over.
Know where I stand.
Come on over to zenledger.io. We have great customer support. Use that Monkz 15 MOKZNZ 15. If for some reason it doesn't work, just go ahead and pay full price and then tell us. We'll give you that 15% discount immediately. It'll work for anything except for the CPA packages, the $3,500 and $6,500 packages. You can use it. You can buy 5 years of stuff. You can buy future years, or you can come back next year and say I'm Monkz, and if for some reason the coupon doesn't work, we'll still honor the 15%. If you ask for a refund, we'll give you 100% refund. We'll just ask you for a little bit of product feedback, oh, why do you want a refund? We just want to hear your feedback so we can make things better. But we've We've had tens of thousands of clients. We've been around for 4 years. We've raised $12.5 million to date. Mark Cuban, among others, are investors, and we'll, in the next round, I'm pretty excited to announce like who we'll probably have as investors.
Yeah, who your next round is. But wait, what? Mark's all in the NFTs now too, right? Oh, how come?
He is. So Mark is someone who knows how to sell, right? So Mark knows how to sell, and he has great cash flow inbound, right? So he operates a lot of businesses that generate a lot of cash, and so he's not that afraid of doing some super risky stuff.
All right, we're gonna have to give him a Monkz. It's not, if he's not in control, we're good at it. So, man, Pat. Well, thank you for doing this, dude. I know you're not feeling well, and this was kind of last minute for you, but I always appreciate it. I always have fun talking to you. I can't wait to see you again. I know you're going to be traveling around because you guys are raising a shit ton of money, and you're probably going to be one of the most successful entrepreneurs in crypto, especially from the non-ICO side, right? Your guys' company, for not launching a token or doing any of that stuff, you guys are actually probably one of the biggest in all of crypto, which is actually kind of stunning and amazing because you guys are fucking making huge amounts of revenue now. So, you guys will be passing, $100 million mark, $200 million mark. That's going to go quick at this point, right? Because you guys go in Series A and Series B. It's just going to be what?
Hopefully we're like, we have retail offerings, kind of like TurboTax or cryptocurrency, but we also want to do enterprise stuff like NetSuite for crypto. We are helping Valkyrie with their $100 million DeFi fund. We're going to be marketing to all the people who buy Bitcoin futures ETFs through Valkyrie. Avalanche, we're working with all their top projects and helping Avalanche. We helped Grid with their pre-IPO accounting, the mining, Bitcoin mining. And we have tens of thousands of clients. A lot of them are crypto founders, token issuers. So we get testnet access. We know the Uniswap team, the Aave team, Curve team, all the DeFi OGs.
All the other DeFi OGs. Yeah, I was going to say Compound Dharma, everybody. I remember we were all talking to the same people at the same time. But
there's only so many people you can trust, right? So
there's only, especially the ones that are sticking around too, especially past 2017. So it's definitely interesting. But all right, man. Well, I appreciate it. Again, thank you very much, and thanks for hooking it up.
Everyone, have a good night. Really, really fun. Thanks for the memes.
Yeah, thank you for the memes. You guys, appreciate it. But I will see you guys tomorrow night. Again, real quick, let me pull up my stuff on here. Let me see if I have my announcements from yesterday. So tomorrow we're going to be doing ERC20 fungible tokens. We'll be looking at minting ERC20 tokens, ICOs, decentralized exchanges, and investment models. Should be fun. So anyways, all right, guys. That's a wrap. Appreciate it. Talk to you guys later, Pat. I will talk to you in a little bit. See you later, dude.
Bye.